This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus you got 9 out of 10 stars from the Coin Bureau guy. Bityard! Hello everybody, welcome back. So I imagine probably not going to get many clicks on this because most people have fled the market, but I think from what I can see between next week and the week after, but soon, we're going to be looking at the everything bounce, right? So this is counter to the sentiment right now, which is extremely bearish across absolutely everything. Like everybody, stocks, for any type of stock, all the stocks, even bonds, everything's going down. Obviously we know crypto's going down. So I think from what I'm going to present to you, if you've got the stomach for it, it should suggest bouncy time and probably a decent relief rally across all bonds. Now this isn't going to this isn't probably going to continue on to new all-time highs, but this could be a really significant bounce. And so something like Bitcoin would not at all surprise me to see between 30 to 100% bounce. I'm going to get a lot of hate for that, but give it a couple of weeks to see, and then feel free to come back and comment then and see how it's aged, right? So stick with me. Let's go through some of these. So first of all, just run through the counter indicators, right? So we're going to look at first of all, we're going to look at wheat. So this is wheat futures feeding into the inflation prices. Big problem for inflation is wheat prices. Now this could obviously go higher. We are here at a weekly Bollinger Band center, so the 20 weekly, the 21 exponential as well, but it does not look good. It looks like it's peaked for sure, right? For sure. I think the fact that with the whole Russia-Ukraine thing, I think the price of wheat has basically overshot the mark. Doesn't mean that there's no shortage of wheat and the demand is still high. Doesn't mean that. It just means that the prices are going to come down as a result of this breaking down. This looks like it's peaked. It's gone too far, too fast, and it looks to me like it's going to break down over a few weeks, if not, beginning of next week, right? So that is your wheat. Again, we're talking about inflation. We're talking about two main components to inflation just to begin with. Let's have a look at oil futures. So oil futures can't break out from its 120. Now it doesn't mean that it can't, but it means that at the moment it's unable to, and it looks like it's going to receive a natural rejection, which is fine. Again, price of oil is the price of oil. It's largely controlled, which is why it's unable to generally come down, but it's also a very tradable asset, and it would look like this is an obvious place for it to catch that rejection from. This is a blow off top. Anywhere trading between 110 to 120 is peak territory, and I think it's inevitably going to float back down to around about 75 throughout the year, right? Again, helping inflation prices come down naturally. So we've got food and fuel. These are the two main drivers of inflation outside of Federal Reserve monetary policy and all the things that they did since 2020. So these two look like they do want to get rejected and they do want to come down lower. Now they're not going to come down massively, and they probably won't stay down. So if oil breaks down to 75, that's a 33% retrace from here. So be it. It's still a very bullish chart, let's face it, but it doesn't mean that it can't come down for a decent correction, catching some of those shorts basically. And again, wheat futures is way high, and if we were to think about this as far as a chart is concerned, this is ready to go into what would normally see as some form of a full-on retrace of its current prices. So maybe going to wrecked city basically. On the daily we can see it breaking down below all moving averages, similar to what we saw on Bitcoin potentially maybe a few months ago. So it's that kind of vibe. We're losing support on moving averages. We're below the cloud. We've not quite got the short signal on the daily here, but we're likely to get it. Well, we would likely get this short signal if we were to close candles below more or less where we are right now. So we are looking for this to get a short signal on a daily, and that'll take about 2 weeks to play. So we're looking for this relief rally across all boards to really be quite a significant one and play within a 2 week period. So now let's have a look at the Dow Jones Industrial Average, right? So we don't normally look at this one, but it is a decent one to look at, coming down to its moving averages, similar to what our expectations of these counter trades to be. So we're looking for this to come down. This will have an inverse effect on stocks and crypto through association. Same with oil, to a lesser extent. Oil's going to trade within a range. So we're looking for this to catch a bounce around these levels. So we are talking sort of like the lower to mid 29,000 for Dow futures, which brings us to our pre-pandemic high, where most things, major indexes, should receive through just basic horizontal retracement of price action, relief bounce, right? I think everybody's got their eye on these sort of things, and if we merge these two, which are going down, with these two, which are going to catch a bounce, it would appear that inflation figures will start to go down and confidence will resume. We've just obviously had a 75 basis point rate hike as well. That's going to feed into some decent inflation figures, I would imagine. Maybe not next month, but the month afterwards. So it does look like inflation is likely to peak shortly, due to what we're seeing here. S&P as well. This is S&P on a monthly. Again, we are approaching this pre-pandemic high, which is around these levels over here. So we've still got a ways to go, but that's a 50 monthly exponential, which is quite a hard level of support, which is also basically coming in at the bottom of the Bollinger Band. There's a lot of things, including Bitcoin, that are doing exactly the same thing on the monthly. So that, again, has a little ways to go before we catch that bounce, if we were to get it. But really, today, what we down on S&P, just under 3%. We've got another 4% to go before we hit that level. Same with the Dow Jones Industrial Average. So looks like we've probably got a little further to go on this one, to the tune of about 2%. So really not much at all. And it's not for me to say, but I've been on the sidelines on stocks for a long time now, since December, since Omicron came out, and I am actually from today going to start building up a little bit of a stock portfolio for what could be a considerable bounce. And again, same thing with Bitcoin. I think it's reasonable to assume that Bitcoin is going to move through association quite aggressively. So finally, we'll just have a look at our old friend Nasdaq, and there we go. We've already approached this the Bollinger Band bottom, and this being we're on the wrong one here. We're on the wrong one. We'll go to this one, but it's basically the same chart. It's just that there's more lines for us here. So yeah, we're basically approaching that $11,000 area for the Nasdaq, which again through association forms a level of significance. It's not the pre-pandemic high, but it's very, very strong. We'll think about it on a monthly here. Big resistance here, big support, big support, big support, big support. So, and again, bottom of the Bollinger Band with your 50 exponential all in there as well. Outside of that, we've got the Dixie, which is, I wouldn't say selling off, but it's approached a certain area now, which is front run the area that I would say would be more significant. But basically that 105 area, and it's had a fine rejection today. It's had a real sort of rejection here. This is just a 4 hourly, so it looks like it's naturally peaking, and this isn't by any means the top, but it does look like it's kind of naturally peaking around these levels. Now we just move it outside of a 4 hourly to a daily and have a look over here. We've constantly, and again, this is all about fighting the Fed. You can't really fight the Fed, but we constantly have bearish divergence all the way up here. Now, obviously, we turn our other indicators on, and this is why we knew that this was going to break bullish anyway from back down in these levels. We knew it was going to break bullish all this year. It comes as no surprise. We've been talking about it since September, but yeah, I mean, it's gone from strength to strength to strength to strength to strength, and will continue to do that as the Fed basically continue with their trajectory. But at the same time, the last time we had a major rejection given to us through the bearish divergence was on this pullback here, and it came all the way back down to the bottom side of the range. It was quite a significant resistance. It's only a 2.5% move, so let's not get too excited. So we could assume that potentially the Dixie gets rejection here and floats its way down towards this 102 zone. And look, we're not looking for a bear market in the dollar, no way. But if we do start to go into recession, we might start to see that. And again, that could end up reflecting into prices. But again, that's highly speculative. So it's interesting to see some of these things merging together, especially the way that I choose to try and front run CPI data now by thinking about wheat as far as food prices, and oil obviously as fuel prices, and we can see that these are both getting rejection and the dollar's coming down as a result. Marry that with the major indexes that we've just looked at coming down to major supports, with only another 2 to 3% really to go on them now, and then we basically out of that big bag of things that we've thought about, we introduce crypto into the mix, effectively Bitcoin mostly, and it makes for the perfect storm. So everybody's super bearish right now. Every time I go on my Telegram, which you should join, by the way, every time I go on there, there's basically somebody posting some FUD. Like, all right, just calm yourself down, all right? Calm yourself down. These are normally signs of getting close to a bottom anyway. If it wasn't for the overall economic environment, I would have basically called a bottom already. But as we all know, we keep our ear to the ground, listening to the Fed. We know what their plans are. They're going to keep raising rates and blah, 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 blah. But it would appear to me that I think that we're very likely to see quite a significant relief rally across all markets, basically, and then as a result of all these things that we've just looked at and thought about, including the rate hike that took place yesterday, CPI figures start to actually show that inflation has actually peaked. So we'll keep our ear to the ground. Like I say, I'm building up a stock portfolio now. I've been in 90% cash since December. It's burning a hole in my pocket. I think now is the time to start to deploy some of that, even if it were only to be for, like I say, a 30 to 35% move for major indexes, which is massive. That's a massive move for stocks. I know that's nothing for us in crypto, but it's a big deal. And like I say, that's not to be sniffed at. We haven't caught a break for a long time when it comes to gains, so it's nice to be able to anticipate something of that size, especially when stocks are concerned. We can only imagine the snowballing effect that will have on Bitcoin. So let's just think about it overall. I know it's not going to get, this video probably won't get watched much, and I know it'll probably get a lot of hate, but remember, the counter trades, when you're really looking to make a really good trade, it usually goes against pretty much everything that everybody says. It seems to me that the way that these are all working together seems to spell an impending bounce of significance across all boards. So like I say, it's my money, I'll do what I want with it, see where it goes. Like I say, within a 2-week period I would expect that bounce to start and continue. Given we're looking at these on weeklies and monthlies, I would expect that to continue maybe for as much as 2 to 4 weeks. So pretty good stuff. Anyway, thank you for watching, take it easy.